Let's talk about the comments from yesterday from Fed Chair Jay Powell. The markets are reacting more volatilely these days, arguably much more in response to what the Fed could do in the coming months than anything geopolitically with regard to Russia and Ukraine. Is the Fed in a position right now, in your opinion, where we can navigate this rising rate environment without throwing the U.S. economy into recession?
Good morning, Dom. Great to be with you. And the answer to your question is no, the Fed is not going to be able to do it in a successful fashion. Typically, a soft landing, which is always the expectation or the preference of the Fed, is seldom achieved in actual practice. And the reason is, look what happened. And based on what you said a few minutes ago, Dom, they talked in terms of forward guidance in the past. You had Jerome Powell telling us repeatedly that the inflation was transitory. He kept repeating that there was going to be no increase in interest rates and everything was hunky-dory. So he gave you a lot of forward guidance when you didn't need it. Just now, when the markets are volatile, when you need some help, and a clear guidance from the Fed on how it's going to proceed, and the questions that were asked yesterday. What pace at which will you reduce the balance sheet? Will you increase the interest rates by 25 basis points or 50 basis points? There were no answers. He was not going to tell you anything. And in terms of the 2 to 10 spread, which you referred to as well, Dom, it is flattening in a hurry. This is all against what the Fed wants. The flattening can quickly move over to a negative spread, which means the 2-year will offer you a higher yield than 10-year. And if that happens, it is going to be a precursor of recession. And I'm looking forward to seeing where it goes. But I think Jerome Powell doesn't leave you much of an option to looking at a much more deterioration overall in the market.
Sri, I wonder, you mentioned so many of these headwinds that you're seeing right now, but we know that the markets, specifically the equity ones, have been reacting in part to maybe what you're forecasting for. But is there a scenario right now where you can explain how it is that the markets are as volatile intraday as they are? What exactly is happening with regard to what you're seeing in positioning or sentiment? Why exactly can we go from a 1,000-point down day one day to closing up and then seeing futures this morning go from 2% lower to being modestly positive in the span of 3 or 4 hours?
There is an intense amount of speculation, Dom, which is partly contributing to it. And secondly, there is a lot of option action and people who are taking short-term positions, trading positions, which are again reacting to these developments. So on top of that, when you throw in the uncertainty about the Fed's next moves, and for instance, we have moved from not looking for any interest rate increase in 2022, that was the prevalent view just a few months ago, to looking for up to 5 increases in 2022 alone. When you have that much of a range, it is not surprising that the day-to-day volatility also increases because there is an intense amount of diversity in what investors expect may happen in the markets. And that's not going to go down, Dom. The Fed's moves yesterday, the press conference, only accentuates it.